Hello friends, we'll be discussing the journal entries for the chapter which we are studying about, that is sale of goods on approval or return basis. Now, when we talk about the journal entries, this is basically when the business casually sends out the goods for sale, that means on approval or return basis. Now, what are the kind of journal entries that we have to pass through? Why exactly these journal entries will be passed is something that we'll be discussing right now. So, make sure you take down these notes within your rough book, so wherever you want to keep it, but note down these journal entries so that it is easy for you, or rather for your reference in near future, to understand how these journal entries were derived and how these applications will be able or will help you in solving the journal entries in near future regarding this specific chapter. So let's go ahead and figure it out. So the first entry that you have to pass is when the goods are sent on sale or approval basis. In such a situation, you can either debit the trade receivables, that means because that is an asset for us, because that is an income that is supposed to come. Hence, it's either a trade receivable or the customer's account can be debited, and on the credit side, it will be a sales account. So it's either trade receivables to sales account or customer's account to sales account, and the amount that will be mentioned here is the invoice price. Now let's understand the next journal entry here. Now the second entry is all about when the goods are rejected or returned back by the customer or the end user. Then in such a situation, whatever was credited in the first place, rather you can pass the reverse entry here. So it will be sales account debit to trade receivables or customers account, or you can also mention instead of sales, return inwards account debit to trade receivables or customer account. So that will be again at invoice price. This has to be passed only if the goods are returned back by the customer within the specified period. Make sure I'm emphasizing this on the word within the specified period. If it is not done, then you cannot pass this entry. Let's go on to the next entry now. The next phase of the journal entry is where the goods are accepted by the customer or the end user. In such a situation, you do not have to pass any journal entry there because it's the complete sale that has happened, and for that you've already passed entry number 1. Hence, in the third case where the goods are accepted, you need not pass any entry. Hence, it has been mentioned no entry there. Let's go on to the next entry, that is the fourth entry here. Now the fourth situation is where the goods are accepted at a price which is higher than the invoice price. For example, the invoice price was 100 rupees. However, the goods have been accepted by the end user at a price like 120. So in such a situation, what entry do you pass? You pass the exact same entry that was passed in the first instance, rather the first entry itself. Trade receivables account debit or customers account debit to sales account. However, the amount will be only the difference. That means if it has been marked as invoice price at 100 and if it has been sold at 120, the difference between 120 and 100 will be 20 rupees, will be the amount that will be mentioned here in this entry, only if the case comes as the invoice price is less than as compared to the sale price, or rather it has been sold out at a higher percentage or at a higher rate as compared to the invoice price. Now let's figure out the fifth entry here. Now the next entry is when the sales, or rather the price that has been mentioned, is less than the invoice price, or rather the sale happens at a price less than the invoice price. Then in the same situation you have to pass the reverse entry that you have passed in the first instance. Rather, when we talk about the entry that was passed first, that is trade receivables or customer account debit to sales account, that will be reversed here. Sales account debit to trade receivables or customer account, and here the difference will be again rather the amount. So if it was marked as 120, however you have sold it out at 100, that means that difference will be marked here. Let's figure out the next entry now. Now the next entry is at the end of the year when the closings are supposed to be done, and if you figure out that the goods are still with the customer, however the specified period is not yet over. Hence, in such a situation you will understand that the sale is still being considered or it is not getting done yet. Hence, what you have to pass is this entry: sales account debit to trade receivables or to customer account. That means we consider that the sale hasn't been done, hence it is coming back to us. We'll just consider this because we have to close the books of the year. Hence that specific entry will be passed and it will be at the invoice price here. After this, there will be one more adjustment entry that will be passed in relation to the same thing. So what happens when the goods are still with the customer, however you have to close down that thing for that specific year. That means that stock what is yours is still yours because the ownership hasn't been transferred yet, because first the customer hasn't accepted the goods or rather hasn't approved it, and the second thing is that the specified period is also isn't over. Had it been that it was over, you wouldn't have considered passing these entries at all. Hence, once this entry is passed, there's one more entry that you need to pass and we'll figure out what entry that is. So the entry that we have to pass here is exactly the closing stock entry. So the entry that will be passed is stock with the customer account debit to trading account, and here the amount that will be mentioned is either the cost price or the market value, whichever is lower or whichever is less will be the entry that will be passed here along with the amount. So I hope with this video you got clarity about what kind of journal entries we have to pass, how we have to go through with this, and how further we'll be able to go through the according to the alignment that we have went through right now. Right from the sale until the closing stock, everything has to be in that alignment itself. Only then you'll be able to understand the sum and then you'll be able to solve the MCQs on this. So I hope this video gives you a clarity on this. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.